Hey everybody, how are you? Welcome back to the channel. So I'm drinking coffee today, going through some comments on the channel, and I realized so many people have been asking about this video right here. This is one of my earliest videos. It's about the VWAP strategy. I get so many comments on it. It's my most popular video by far. It's a strategy I like, and it's a strategy I haven't updated for many months. I have some additional thoughts on the topic, and I wanted to go ahead and make a video for you and put out my new thoughts on this strategy. So sort of a VWAP strategy revamped for 2020. This is a day trading strategy. It's a scalping strategy. It's a quick hitter. It's in, it's out. And what I thought I would do is add about 5 or 6 thoughts on the topic, changes that I'd make to the strategy, ways to refine it, make it better. And I want to go ahead and just start off with that and then give you an example on an actual chart, on an actual large cap company, and kind of walk you through how I approach the strategy and why I think it's good and why I think it works. Before I give you any updates on this strategy, I need to break down what the strategy is, because that way you'll have reference of knowing exactly what the strategy is, how it works, what the parameters of it are, and then you'll be able to absorb all the updates that I'm gonna give you here in just a moment. So let's jump into the charts, and I'm gonna explain how the strategy works, and I'm actually gonna show you a live example. I think it'll make more sense that way. So let's hop over into the charts. Okay, so we've got Facebook up here on the 1-minute time frame, and I'm just gonna break down how this strategy works, and that way you can kind of remember or be refreshed from the old video. And again, feel free to go back and watch that old video first and then come back over here, and this will maybe make a little more sense. But here's the gist of it. We've got Facebook. You see how Facebook pushed up and then it turned over and started to come back down. This purple line is the VWAP. So when the VWAP gets broken by this candle, you wait for that candle to close, and then you're looking for the next candle to break the candle that crossed the VWAP. So as you can see right here, this candle broke it, and then this candle actually broke the bottom of this candle. So the candle that crossed the VWAP, the bottom of its range gets broken by this next candle. So I set my order about a penny or two below the range of this candle, and then I take this short. And my stop loss is typically going to be at the top of this candle where we started. So you're looking to ride it down here. Whether you're looking for 1-to-1, 1.5-to-1, 2-to-1 on your targets, it'll all kind of depend on what your goals are and what you're after. Again, if we go to this one, let me zoom in a little. If we come to this candle, we got to push up. You can see it crossed the VWAP, and then this next candle broke the range of the candle that crossed the VWAP. That's the entry. So up, pushes up, stop loss 1 penny below this candle. So you can see, even if you got that pullback, you still continued higher. So if you were to sell half your position into this move and then let the other half run, you would have had a pretty good trade on this one. So that's the VWAP. I was calling it at the time in the old video the VWAP break of the break. So you're wanting to get this break of the candle that completed the break. It's kind of confusing saying VWAP break of the break, but basically you're just looking for a candle that crosses the VWAP, and then you're looking for the next candle to break its range. So I think that was the only example we had here, but you get the idea. You've got this one crossing, this one breaking. That's the gist of it. So now let's dive into the updated specifics. So number one, you might say, what's the time frame I should use? Which charting time frame? For me, I go with the 1-minute time frame. This time frame shows all the nuances, all the little micro movements, and it's great for the VWAP break because it gives you that granular detail. So let's take a look at the chart. Pretty self-explanatory, but we've got Facebook's chart up here. You can see right here, 1-minute chart. You could select any time frame you want. You could have a 5-minute, 15-minute. I've just found that I prefer the 1-minute time frame. Every candle is 1 minute, so you're seeing all the little micro movements in the chart, and it just makes the strategy a little more cleaner, in my opinion. Now on to tip number 2. Tip number 2 is actually kind of interesting, and this is a new one from the old video. This isn't in the old video, but you've got to get some distance from the VWAP. You can't just have the day open, trade right along the VWAP and then break and move and take the trade. You have to get it to go away from the VWAP and then come back and break it. So as I've used this strategy, I've tried to figure out how much distance do I need to get from the VWAP before coming back and breaking it. And I've found the best way to do this is to get one candle's width away. So if we flip over to the charts, I'm going to show you how you have to have a candle that is not touching the VWAP, that is clearing the candle that was touching the VWAP, and then you're good to go. Let's take a look. Okay, so here we are, Facebook's 1 minute chart. I want to show you what I mean. Facebook opens up and we're kind of pushing around here. There's not much going on, and you're getting a break above and below and above, and it's kind of confusing in here. But then you get, finally this candle crosses, and then this candle's not touching the candle, not touching the VWAP. So you look for a candle that's touching the VWAP, and then the first candle that is not touching the VWAP. That's the key. So this one's not touching anymore, and it breaks this candle. So now you have separation. You don't take this break, you just let that be the separation. And now on the way back down, you can play this break. So just to summarize it one more time, candles are touching, 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 not touching. Okay, so the first candle that's not touching the VWAP, that's the key. You're like, okay, now we're starting to get separation. It also needs to break the range of the candle that was touching, which this one's doing. So we're getting up and away from the candle that was touching the VWAP. Once you have a separation candle, this one, and then this one also helps, you've now got enough separation to then play this down move. So now you could go short below this range. You just don't want to get hung up in a situation where you're getting a lot of candles touching the VWAP and then one goes down, one breaks down. I don't typically take those trades. I wait for a candle to not be touching the VWAP and break the previous candle that was touching the VWAP, so you get some separation so that when it turns around and comes back down, then you can play the break. You've got some separation, some movement. You want some volatility, some movement in the stock price, and that will give it to you. Number three, you got to watch the SPY, the spiders, the ETF that tracks the S&P 500. This is critical. This is also not in the old video. What you want to do is watch the SPY for direction in the market. If you see the SPY is starting to put in a down day, the chances are your VWAP breaks are going to be best served in the down direction. So if you want to go against the SPY, by all means go ahead, but you might not have the same win rate and you might not hit that multiple target, 2 to 1, 3 to 1, whatever you're shooting for. So I would use the SPY as my reference for whether I'm going to take something long or short on the VWAP break. All right, number 4 is kind of obvious, but you've got to trade a liquid product. What do I mean by a liquid product? I trade large cap stocks. You can filter those. You can go to finviz.com. You can go to TOS platform and look at their scanners. You can filter things to be large cap and higher, and that way you're staying with most liquid names. Another way to tell is, say you're looking at the bid-ask spread. You want that bid-ask spread to be typically less than a nickel wide. So say Facebook's trading for $185.30. That's the bid. Now, let's say instead of 30 cents, it's 33 cents on the ask. That's a tight spread. So $180.30 by $180.33. That's a nice tight bid-ask spread. And that way you don't lose money on entry and exit, especially if you end up having to use a market order to get out of the trade. You don't want to get slippage, and your slippage can be great if the bid-ask spread is wide. Some stocks will have a bid-ask spread that's 20, 30, 40, 50 cents wide, and you want to avoid those. Those aren't liquid enough for this strategy. Let me show you a quick example. All right, if you take a look at Facebook's chart, now because this is on the weekend, and you can look up here at the bid-ask spread right in this area, you can see 191.57 is the bid and 191.80 is the ask. So that's pretty wide, but that's because that was the last print from after hours trading on Friday. When Monday rolls around and the market opens up again, you'll notice this bid-ask spread will tighten up really nicely. It'll get to be within a few pennies of each other most of the day. So just checking this and making sure it's not, more than 5, 10, 15 cents. You want to keep it really tight. If it starts getting wider where it's 20, 30, 40, 50 cents, you're going to lose a lot of money in slippage. So just be aware of it. All right, where do you place your stop loss? That's a great question. I get that one all the time in the comments on the older video. And what I've basically summarized up is you want to place your stop loss basically at just beyond the candle that did the breaking of the VWAP. So the candle that breaks the VWAP, that's sort of your trigger candle as far as, okay, now I'm watching to see if we're going to get a break beyond the bottom of the candle. That candle that actually broke the VWAP, a penny beyond the range of that candle is exactly where I put my stop. Let me show you a quick example. All right, I've got a perfect example for you, and I know I'm cherry picking things, but I just want to illustrate things really clearly for you. So if you look at this and you say, okay, this candle here is breaking, so we're pushing up. I'm going to zoom in even closer. So this candle breaks it. You say, okay, I'm going to take note. I'm going to wait for a break here. So a penny above that, you get the break. You're in the trade. It's moving up. You stop yourself at the very low, 1 penny beyond the low of the candle that crossed the VWAP. So if I stop myself here, and I'll even draw a line in so you can see it clearer, but if I stop myself basically right here, that means that this push up, you could have taken profit there, maybe 50% profit, got a pullback, you didn't get stopped out, and then you continued much higher. So I stopped myself a penny below the candle that broke the VWAP. Now, in the reverse direction, let's say we were trading this one, you entered here as it broke down, my stop loss would be about there. So we would be looking to write it down here. If you held 50 shares or half your position later, you'd end up ultimately getting stopped out up here. But stop here, 1 penny below, stop here, 1 penny below, just depending on if you want to go long or short. And then finally, we talk targets. People want to know, what can I expect to get out of this trade? And me personally, it's best to set my bar very low. I like to go 1 to 1, 1.5 to 1, 2 to 1, rarely beyond 2 to 1. But one thing I will do is say I buy 100 shares. I get the VWAP break, and then let's say I get to 2 to 1 or I get to 1.5 to 1 and I sell half the position. Sometimes I'll sell 50 shares and then just let the other 50 go. Just let it go, and you can set a stop loss at your break even so that you don't lose any money on those last 50 shares. Then if you want, say you happen upon a big up day and your stock just keeps going, or on the other side of it, maybe you get a big down day and those 50 shares just ride. Even if they ride for a couple of hours, you can just let it go because you know that because you put your stop loss in place, you're not going to lose any more than break even. So watch this video, then watch this new video, and then I want you to jump in the comments and tell me, is that video better or is this video better? Just say better. If you don't think it's better, just comment and say nope. So either better or nope in the comments. Let's see if we can get 50 comments on this video. Yep or nope. Better or nope. And we'll see you next time.